Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Wednesday, March 21st, 2012. I'd like to thank you all for tuning in this morning. Once again, we'll talk about the S&P 500 E-mini futures, which are trading higher by about 2 points at the moment, right to around the 1402 level. So a little pop higher for the futures this morning. It's been an incredible run. Take a look here at the 10-minute chart, and you'll see that futures have come off the morning highs, but nonetheless still in positive territory by about 2 points at the moment, right to around this 1402 level, bouncing around here. Now, one thing you're going to notice here is that the futures are starting to decline for about 30 minutes now. These are 10-minute candles. You'll see them declining now for about 30 minutes, all because of the U.S. dollar index. You'll see the U.S. dollar index has begun to surge, and once the U.S. dollar index started to catch strength, that started to take the markets lower. Now, here's the caveat, what you need to watch for. Yesterday, the U.S. dollar index started out very, very strong. But by 8 o'clock in the morning or shortly after, it started to fade. And once again, the futures caught a bid off the lows. And the markets, essentially with the exception of the Dow Jones Industrial Average, finished basically just slightly lower or basically flat for the most part. So we'll have to see now, if you take a look at the U.S. dollar index and see how it's starting to surge. Will the dollar fall once the opening bell rings at the New York Stock Exchange? This is a trick that the institutions use to get the market up. They'll let the dollar inflate early, then they'll try to take down that dollar. Once the dollar goes down, they'll inflate a lot of the commodity stocks, and these days when the dollar falls, everything will catch a bid. So you have to watch for that. You have to be on guard. Yesterday, the dollar started to dip right around 8 a.m. Today, you could see something similar, so be aware of it. The dollar is now getting a little bit short-term overbought on this chart. And we'll see. We're right around that 8:15. Right now it's 8:22 in the morning. So we'll see if they try to take that dollar down around the 9 o'clock hour and maybe 9:30. Always be aware of that. When a dollar falls, that's a way of inflating the stock markets higher. Okay? So let's take a look at a few things out there. We're going to start off with gold today. GLD is trading at $160.20, $160.20. That's basically flat from yesterday's close. It did make a little move higher earlier in the morning and then has faded. So GLD is basically where it closed yesterday. No big deal there. Here we'll talk about oil and the USO. You'll see the USO is trading right around $40.46 at the moment. Closed at $40.43. So essentially it's flat, so to speak, at the moment. But spot crude is still up 40 cents to around the 106.50, 106.45 level at the moment. So again, spot crude still remains very, very high, trading right around the 106.50 level, and we'll just see how that plays out. But a stronger dollar will bring down oil prices, will bring down gold prices, will bring down most commodity prices, including the base metals and industrial metal stocks as well. But if the dollar starts to fade, those stocks could catch a little bit of a bid. And again, we'll have to just see how this all plays out. Once the market opens for trading at 9:30, that's where the dollar will normally shift. But there was about a week's time where the dollar did not have that much effect on the overall stock market indexes. It looked like the markets were starting to trade higher as the bond yields went higher, and that's a whole separate can of worms there that we'll have to talk about at another time. But in any case, right now futures are trading higher by about 50 cents, and as long as that dollar continues to climb, you'll see how the futures on the S&P 500 will come down. I'm just going to go back to that dollar chart, and you'll see how this thing has been surging here over the past few minutes as we've been speaking. All right, let's take a look at a few different stocks that are out there. I'm going to talk about Oracle first. Ticker symbol ORCL. You know the stock. It was up, down, and all around. Company reported earnings yesterday after the close. Today it's trading right around $30.75. Again, a little bit of a higher move, up about 65 cents from yesterday's close, which was $30.10 a share. The Oracle chart is still okay. There really is nothing really wrong with it. If it comes down and takes out the 29.50 level, then I would be concerned with Oracle because it wants to go back down to 28. But right now, it's the gap is okay. It's nothing that major, but the pattern on the daily chart was good. So the stock, has potential to move up a little bit more. Let's take a look at Jabil Circuits. Ticker symbol JBL. Stock is trading a little bit lower, closed at 26.46, 26.49 yesterday, trading at 25.85 at the moment. There's nothing I would do with Jable Circuits. If the stock gets down to around the 23.50 level, I think it's a bounce play right there. But it looks like it's a fairly decent gap down. It's not all that strong. The stock has been in kind of has some support around the $24.50, $24 level, but ultimately $23.50 is your area if you want to look for a bounce on Jable Circuits. Okay, I'm going to leave it there and leave it there at that. I'll take a look at General Mills. Ticker symbol is GIS. This stock this morning is trading around the 38.50 level. That's pretty much where it closed yesterday. I don't see anything great for General Mills right now. Be careful with this one. If this stock starts to sell, it could go down and test that 37.75 area, and then it could break down lower. The stock has very, very good support around 36.50. On the upside, the stock has very good resistance at 39.70. So I'm not really sure which way this thing is going to play out. But either way, there's not a lot to do on this General Mills from the current pattern that is in place. Now let's take a look at the Hartford Group, Hartford Insurance. The stock is catching a pretty nice little bid, trading up to around $23.20. The pattern it's coming off of is not bad. Maybe the stock has a little bit more upside. I would not look to fade it, although there is a chance that it could run into pretty good resistance around, let me see if I could get this level right, around the 23.50 level. So there's a chance the stock can run into good resistance around the 23.50 level, but it's a decent gap, has a little bit of strength. It's really going to depend on the U.S. market for the most part, but I would say 23.50, that's probably a decent resistance point. If you own the stock, trail your stop around that level. When it gets there, start trailing that stock, the stop loss tightly if you don't want it to go against you. I'm not sure it's going to be a great fade candidate there, but there should be resistance around 23.50 and next resistance around 25, but I don't even see it getting to 25 at all. All right, let's take a look at Baker Hughes this morning. This stock is getting hit a little bit to the downside, still support at 45.50. It breaks here, you're going to go and look at 44.75, and then all the way down to $42. So some levels there for bounces. Still holding support, which is 46.50, but after this, it's going to be all the way down to around the 44.75 level and down to 42. There should be bounces at each one of those levels. Alrighty, that's pretty much it. All that I'm seeing this morning. Again, futures have faded a little bit here on the back of a stronger dollar, and I'll just show you that dollar chart one more time. It looks like yesterday the dollar in the market started to get back to that inverse relationship. A couple of things you want to know about today. Fed Chairman Ben Bernanke, Federal Reserve Chairman Ben Bernanke, and former Fed member and Fed President Tim Geithner, who is now Treasury Secretary, are scheduled to testify in front of a congressional panel over the European debt crisis. So that's going to be an interesting one. Again, I don't really see, unless Ron Paul is there, I really don't see any hardball questions getting thrown at these guys. But in any case, we'll see if it turns out to be something of interest. But that testimony will take place this morning. Maybe worth watching, maybe for a little bit of comedy or something. But in any case, we'll leave it there. Have a great trading day, everybody, and we will see you on the charts. Take care now. See you tomorrow.